Good morning everyone and welcome back to the channel. I hope you're all having an absolutely fantastic day. In today's video, we are taking a look at the high time frame and short-term charts as Bitcoin struggles to continue toward the upside, again rejecting and retesting the major horizontal resistance at 89 to 87,000 and the weekly downtrend spanning back since March, or should I say January 2025. We can see on the short-term charts with just over 24 hours remaining, we have got the apex of our weekly downtrend and current weekly uptrend spanning back since March 2025. A consequential breakdown of this uptrend will very likely result in an official rejection from our 89 to 87,000 horizontal resistance and weekly downtrend, resulting in a continuation lower. We are going to be discussing the implications of this move on both the short-term and macro, diving deep into key reversal points, short-term triggers, and potential targets on the short-term charts and the higher time frame. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. By doing that, click the pinned comment in the free channel, contact our admin, click the first link to find a 50+ month trading track record, and the second link to find a 10-minute video inside the VIP channel itself. Check it out. We'll see you in the channel. Let's take a look at the price action. So as we discussed in yesterday's video, Bitcoin is and was apexing towards the converging point of the weekly uptrend since March 11th, which we can see depicted by this uptrend diagonal trend line, as well as that multi-month downtrend spanning back essentially since the beginning of 2025. We identified this apexing point as a major point of confluence where a directional short-term move either below or above the trend line will very much likely result in a higher time frame move, which we know to have massive implications on our expectations of Bitcoin moving into Q2 2025. Of course, we have our uptrend on the RSI, which is signifying although the price action is struggling at these points, we do still have positive momentum, but if we were to see that RSI break down, that is going to be the leading sign that the price action will be unable to sustain above this trend line, and thus we will likely see a correction. We're discussing both potential alternatives in the direction today, describing what will happen and what we are watching out for to be confident in either of these scenarios actually sustaining and playing out. We'll also be talking about the higher time frame charts from our key levels, our potential targets, key levels of support, and of course our technical levels on both the weekly and the daily in regards to our momentum and other various indicators such as our moving averages and our Gaussian channels. Let's go ahead and jump into it, starting on the market data. 24-hour volume and 24-hour liquidation. Volume is down 10%, 167 billion over here. Actually very low, guys. So volume is actually quite low here, and the volume has been dropping for quite some time. This month, all in all, the volume hasn't been very high. I think a lot of people are getting quite bored of this price action. Not too much happening, just a slow and steady upward chop now for essentially the entirety of the last 2 weeks. Liquidations are down 36%, sitting at 168 million. Again, as we start to see the price action consolidate a little bit more, we could move from these expansionary moves into these consolidation phases. We do generally see liquidations drop off a little bit, again, as that volume starts to dissipate. So let's go ahead and take a look now at the DXY. The DXY not doing all that much. We are still expecting sideways price action for the DXY, moving between the 200 moving average and the 50 EMA. Again, the breakout point of the 50 or the 200 will likely result in continuations to the range low and range high. Until then, we are offering more of a neutral stance as we approach and have retested the midline of this channel, but we do not expect a break of that range high. In fact, since we have a deviation from the range high here here on the horizontal consolidation, we do eventually expect equal deviation to the range low. The big question is, when will this occur? Are we going to see rallies to the 50 and then corrections, or are we just going to see straight corrections? That is something we can't answer, and we'll have to see how the price action develops, as this is heavily influenced by the developing tariff news, which we know can change at any time. And of course, the economic environment surrounding future interest rate decisions. Let's move over to the S&P 500. From a technical perspective, the S&P 500 is not looking very good here. For the S&P 500 to have shown a solid amount of strength, we need two things. From a weekly close perspective, we need to see the weekly candle close above this black horizontal level. That's sitting around the $5,750 price. If we are able to close the weekly above there, that would indicate that we have actually sustained this level as a level of support again, and we will likely retest this resistance once more. For us to actually confirm a reversal is in play, we need to see the price action break through around 5,860, which is going to be the low level of this support region prior to us creating that bearish divergence and eventual correction into these lows. So, as we can see, for the S&P 500 break through this region, we will need a weekly close above this level. So at the moment, the price action sitting underneath these two levels is not showing all that much strength and is not looking that ideal. We do have 20 hours remaining, so we can change in 20 hours, but we are watching very closely in this weekly close and the weekly open. At the moment, it does look bad, and if we do drop below that 50 EMA again, that could spell disaster for the S&P 500. So our bearish targets are still sitting at 5,300. That is a worst case scenario. And for us to be bullish again, we need to break 5,860. Between the 50 EMA and that level, we are taking more of a neutral stance, sitting out and waiting and seeing. Let's move over to Bitcoin, guys. Now, before we do, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading fees. You'll support yourself in your trading journey. You'll support me making this content, and you'll trade on an exchange I trust. So check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into the content. So as we can see, Bitcoin is once again still approaching that apexing point in just over 24 hours, sitting at a price of just over $87,000 underneath the weekly downtrend and underneath that major horizontal resistance we can see depicted by this horizontal rectangular box. Bitcoin at the moment, although has seen a very solid rally, is not looking amazing until we are able to break through these regions. So let's start on the higher time frame charts. As we have been saying for quite some time now, when we watch for breakouts and particularly breakout confirmations, we watch for three particular metrics. Number one, we are watching for strength. Number two, we are watching for structure, and number three, we are watching for trend. Now, this isn't like some standard method of breakout confirmations you'll find on the internet. This is my own personal method. I've developed this over a very long period of time, and it's something I've been using for a long period of time in my own personal scalp trading and high time frame trading to increase the likelihood of avoiding fake outs or false breakouts. So that's really what this is designed for, is to increase the probability of avoiding fake breakouts But with that, it can also, in turn, be used to confirm breakouts, right? Because by nature, avoiding a fake breakout helps you confirm whether or not the breakout should be trusted or whether or not you should apply a greater proportion of probability to the direction of which it is breaking. So in this instance, when we're breaking down these three things, we're looking at strength being an indication of momentum. Is the momentum positive? If we're looking at something like structure, the question will be, do we have any clear structural formations developing on both the shorter time frame and the higher time frame? And if we're looking at trend, the question will be, do we have a relevant trajectory of which the price action has been trending in? And is the price action currently retesting below or above that trend line? So when we're looking at these three metrics on the weekly chart, we can go ahead and answer these from this perspective. Number one, is the momentum positive? The answer to that is no. When we're looking at the weekly RSI, we can see the weekly RSI has been downtrending for quite some time, and it is still underneath that respective downtrend, and therefore the momentum is still negative. It is moving in a negative direction. If we're looking at our structure, the question would be, do we have any relevant price structures? The answer to that would be no, we do not. We do not have any relevant patterns. Patterns being horizontal consolidations, falling wedges, descending channels, expanding, broadening wedges, etc., etc. We do not have any relevant patterns. Do we have any key structural levels? Yes, we do. We have got our horizontal support level, which is now a level of major resistance at $89,000 to $87,000, which we are currently under. And do we have a relevant trend? Well, yes, we do. We have the weekly trend. So when we're looking at whether or not the price action has broken out, the answer to that would be no, no, and no. And therefore, we cannot say that we are confident in a breakout until we start to see these things confirm. At the moment, we can use this information as a way to validate a breakout if it were to occur. So let's take a look at this in a positive light. What we can see here is all three of those points of validation from a strength, a structure, and a trend perspective all line up at a point of confluence, which is sitting above that $89,000 level. The reason 89,000 is so important is because if we are able to break through 89,000, we have a structural break, we have a trend break, and we will see the RSI breakthrough indicating strength will turn positive. The all 3 points we will look for to be confident in the breakout will have turned positive. Now that doesn't give a 100% guarantee the price will rise, but it increases the probability that the breakout will sustain, or at least attempt to sustain, much, much, much greater. So that is what we're watching for, guys. For us to be bullish on this price action, for us to expect the price action to rapidly rally toward the upside, we need to see that trend break. We need to see the horizontal level break. So let's now go to potential short-term movements. If we're looking at the short-term price action, we can see the price action has been traveling along the uptrend and against this horizontal, or should I say, this downtrending diagonal resistance now for quite some time. And we know that for us to break through, we need to see, as we said on the higher time frame, trend, structure, strength. So for us to get that structural breakout and that trend breakout, we need to see the price action break through this downtrend. As we can see here, we are coming towards that apexing point, essentially indicating a decision is about to occur, and the decision will likely have a higher time frame impact, as we just mentioned on the higher time frame charts. However, this is where it becomes a little sketchy. What we can see here on the RSI is a very clear uptrend, indicating that momentum is currently positive. However, momentum is now in the short term been steadily decreasing. If we see momentum continue downwards to the point at which this uptrend breaks, we could see the RSI drop into these 38 lows on the histogram over here, which could result in a correction back to 81,000. Now, we know that we have a major support at 80,000 to 81,000. This is a major level of support, and this would be a potential bouncing reversal point where we could retest this trend line yet again. However, if we drop below 80,000, we run into some massive problems on the macro chart, which we'll be discussing in a second. So, what you need to know for the bullish case scenario is Bitcoin needs to sustain above this RSI trend line on the 4 hour. If it does not, we run the risk of a correction. What we need to know for the bullish case is that if we break through this downtrend, we need to at least sustain above it for a weekly close. Again, the reason we say that is because we need that RSI pivot to occur above the downtrend. And if we're looking at the bullish case again, we need to see strength, structure, and trend to be confident. Until then, the trajectory of the price action is down. Until then, we do not have the confirmations we are looking for a breakout. Until then, the potential expectations and targets are still lower. So we are not out of the woods yet, to put it very simply. It is looking okay, but we are at resistance. We are not yet out of the woods. Let's talk about our bearish case scenario now. If we were to see a rejection on the short term, a failure to sustain above and the price action correct into the $80,000 region, we run the risk of dropping into this 80,000 to 76K region. The reason I say that is because below here, we have a massive VRPV gap. We start to drop off significantly as bearish volatility would begin to massively increase. Now, if we see bearish volatility increase in this region, we are likely going to see two consequences on the weekly chart. Number one, the 50 EMA will likely be lost. Okay, that is sitting at around about 78,000. And number two, as a consequence of the loss of the 50 EMA, we would see a loss of the 44.62 on the horizontal RSI, which would flip the momentum negative. In fact, not only would it flip the momentum negative, it would be the first negative momentum shift in terms of horizontal levels we have seen since the beginning of the bull market. The bull market started over here, January 2023, when that bear market ended. We saw a breakout of the horizontal, the falling wedge pattern, which marked the end of the bear market. If we draw a horizontal line in for the RSI, we also at that time had the breakout of this major downtrend on the RSI, again signifying that the bearish momentum that was developing through the bear market has ended and the buyers were able to absorb the price action. We saw a reversal occur, okay? From that point onwards, the price has remained, or should I say the RSI has remained above 44.62, retesting here, retesting here, retesting here. In the prior occasions, all of these retests actually marked the exact bottom of these higher time frame consolidations, the descending horizontal channel formation, descending channel formation, and now we have no structural formation over here, but the 50 EMA retest, okay? What we can see is after the bounce, we had the break of the RSI, and upon the break of the RSI, that is what triggered the next leg up. So if we're looking at historical movements, we need to see the RSI break up for us to get that continuation in the price action. But if we do not see that, as we mentioned, and we break the 50 EMA and we break the horizontal, we run the risk of a correction all the way back down to 53 to 55,000, potentially the 200 moving average, which will cross into that same price point. This is a major, major warning sign we have to be aware of. And I don't think a lot of people are even paying attention to this. Now, will this happen? That's not really the question. It's not really the question of will it happen. The question is it possible? And the answer to that is yes. And while it is possible, you need to be aware of this as a possibility so that if the dominoes start falling in that direction, you can actually act and you have expectations and you know where the price action is likely to go, and therefore you can actually react to it. The alternative is to ignore everything that goes against your bias, and when the price action starts moving against your bias, be in denial for so long that the profits or your portfolio goes into such a big loss that you're unable to act. Those are the two options you have in investing. Option number one is to drop personal biases and be aware of the market, be aware of potentials, and plan for everything so you can make the best and most well-informed decisions at every point in time, okay? Or number two is to blindside yourself to 50% of the price movements, stick to one narrative, pump that narrative, hope that narrative plays out, and when it doesn't, double down and hold forever. Now, obviously, only one of those examples I gave to you is the correct thing to do. Obviously, the second thing is going to get you destroyed. I would never ever recommend that. But if you look at the way I analyze the charts, I always talk about both scenarios because the market is never moving in one direction. The market is never confirmed or never 100% confident in any direction. There's always risk in every movement. There's always risk. So unless you can identify the risk, you can never truly make well-informed decisions, because if you don't identify what the risk is, you don't have the information required to make the best decisions possible. So regardless of whether or not this plays out or not, it is something you need to be aware of. And if it plays out, you will be very happy you were paying attention and you were aware of it, because it can avoid some massive potential losses. So let's hope the price action goes up. Let's hope we see these breakouts, but the moment is not looking fantastic over here. If we start to see these pullbacks, again, we need to be aware of what impact that will have on both the short term. Where are these reversal points sitting? Where are our confirmations? Where are the trigger points? Where are the rec points? And how will that impact the macro in terms of the macro directional continuations, both up and downward? So at the moment, I stand by what I've been saying. I do not think Bitcoin is in a position to get overly bullish. I think we are still seeing negative momentum. We are still under the trend. We have no bullish structural formations. We are just seeing upward chop into resistance, and we need to see this break out to be confident the market is going to go higher. Until then, I'm happy to be cautious. I'm happy to wait, and I'm happy to expect lower prices until we get that confirmation the price is going to go higher. So that is my analysis. Have a fantastic rest of your day, and we'll catch you guys on Sunday. See you then.